J.P. Morgan, the banker who controlled Wall Street. In the early 1900s, the United States had no central bank. There was no Federal Reserve to stabilize the economy, no system to rescue collapsing banks, and no government plan to stop financial panics. When the financial system began to fall apart, millions of people could lose their savings overnight. But in one of the worst financial crises in American history, something extraordinary happened. Instead of the government stepping in, one private banker took control of the situation and stabilized the entire financial system. His name was John Pierpont Morgan, better known as J.P. Morgan. For a brief moment in history, he became the most powerful man in the American economy. This is the story of the banker who built corporate America, reshaped Wall Street, and proved that sometimes a single individual could hold the fate of an entire financial system in his hands. John Pierpont Morgan was born in 1837 into a wealthy banking family. His father, Junius Spencer Morgan, was a successful international banker who operated between the United States and London. From an early age, Morgan was exposed to the world of finance and international business. Unlike many businessmen of his time, Morgan received a strong education. He studied in the United States and later in Europe, where he learned the practices of international banking. By the time he entered the financial world, he already understood how global finance worked. Morgan began his career working in his father's banking network. Eventually, he established his own firm in New York. Over time, this firm would become one of the most powerful financial institutions in the world. But Morgan was not just a banker who loaned money. His real talent was something much bigger. He specialized in reorganizing failing companies. In the late 1800s, the American economy was growing rapidly. Railroads were expanding across the country. Factories were producing goods at record levels, and new industries were emerging almost every year. However, many companies were poorly managed and overloaded with debt. Competition was chaotic, and businesses frequently collapsed. Morgan saw opportunity in this chaos. When companies began to fail, he would step in, restructure their finances, merge them with competitors, and install professional management. This process became known as Morganization. Through Morganization, Morgan brought stability to industries that were previously disorganized and unstable. Railroads were among the first industries he reorganized. At one point, Morgan controlled or influenced a large portion of America's railroad network. But Morgan's most famous deal came in 1901. At the time, steel was the backbone of American industry. Railroads, bridges, ships, and skyscrapers all depended on steel production. The most powerful steel producer in the country was Andrew Carnegie. Carnegie had built an enormous steel empire, but by the turn of the century, he was ready to retire. Morgan saw an opportunity to create something unprecedented. He offered to buy Carnegie's steel company for nearly $500 million. Carnegie accepted the deal. Morgan then combined Carnegie Steel with several other companies to create a massive corporation called United States Steel, commonly known as U.S. Steel. When it was formed, U.S. Steel became the first billion-dollar corporation in history. Its total value was about $1.4 billion, an amount almost unimaginable at the time. At its peak, U.S. Steel produced nearly two-thirds of all steel in the United States. It was the largest industrial company the world had ever seen. With this deal, Morgan demonstrated the power. Morgan's growing power also attracted criticism. Many Americans feared that bankers and industrialists were gaining too much control over the economy. Despite the criticism, Morgan's influence continued to grow. By the early 1900s, his banking firm, J.P. Morgan and Company, stood at the center of the American financial system. Morgan financed railroads, invested in electric power companies, and helped create major corporations like General Electric. His network of influence extended across multiple industries. Then, in 1907, the American financial system faced one of its greatest crises. The Panic of 1907 began when speculation in the stock market collapsed. Investors lost confidence, banks began to fail, and panic spread across the financial system. People rushed to withdraw their savings from banks, fearing that the institutions would collapse. As withdrawals increased, banks quickly ran out of cash. Because the United States had no central bank, there was no official institution responsible for stabilizing the financial system. The situation was rapidly spiraling out of control. At this critical moment, the financial community turned to J.P. Morgan. Morgan was already 70 years old, but he immediately returned to New York to take control of the crisis. From his private library in Manhattan, Morgan gathered the most powerful bankers and financial leaders in the country. For days, they worked around the clock analyzing the finances of banks and trust companies. Morgan personally examined balance sheets and decided which institutions could survive and which could not. He then organized rescue packages, forcing banks to provide emergency loans to struggling institutions. In one famous meeting, Morgan locked several bankers inside his library until they agreed to provide millions of dollars to stabilize the system. He also coordinated with the U.S. Treasury to inject additional funds into the banking system. Slowly, confidence began to return to the markets. Banks reopened, stock prices stabilized, and the financial panic began to fade. Morgan had effectively acted as a one-man central bank. His leadership prevented the financial crisis from becoming a complete economic collapse. Many Americans praised him as a hero who saved the country's financial system. However, the crisis also raised an important question. If one private banker could hold that much power, what would happen if no one like Morgan was available during the next crisis? The Panic of 1907 convinced policymakers that the United States needed a permanent financial safety system. As a result, in 1913, the U.S. government created the Federal Reserve System. The Federal Reserve was designed to stabilize banks, control the money supply, and prevent financial crises like the Panic of 1907. In many ways, the Federal Reserve was created to perform the role that Morgan had carried out alone during the crisis. Beyond banking, Morgan was also one of the greatest art collectors of his era. He spent enormous sums acquiring rare manuscripts, paintings, and historical artifacts. His personal library in New York became famous for its collection of priceless books and artworks. Today, that building operates as the Morgan Library and Museum. Despite his enormous wealth and influence, Morgan remained focused almost entirely on business and finance. He believed that strong financial institutions and large corporations were necessary to bring stability to modern capitalism. During one of the most dangerous financial crises in American history, when the entire system seemed ready to collapse, one banker stepped forward and took control. For a moment in time, the stability of the American economy rested on the decisions of a single man. And that man was J.P. Morgan.